First off, I got to say this, okay? I had my first ever tweet, post, whatever you want to call it on X, go viral yesterday. It's the first one I've ever had that actually went like legit viral, right? 1 million plus views. And it was obviously the one where I sold Tesla stock. And so, you know, I'm not that big on X. I probably have about 60,000 followers or so. So it's a much smaller community I have on X. And I really just started taking it serious really in this past year. Listen, man, thank you guys for being so supportive on YouTube, because we have built such a great supportive community here on YouTube. Man, on X, it's very, very different, right? A lot of people, you know, just insanely mad that I sold those Tesla shares, you know, wishing that you know, I lose all my money and all these sorts of things, man. And so I just want to say thank you, everybody on YouTube here that joins me. That's so supportive. We have such a higher, I guess you can say, emotionally intelligent crowd here, and just overall intelligent crowd. You know, X seems like, at least as of right now, and I'll build up the community, and we'll get a healthier community on there over the coming years, but as of right now, it just seems like it's a lot of like high school, college kids, you know, that think they know everything in the world, and they're just barely probably in the market for their first 2 months, and they're just throwing stuff out there. And so I appreciate you guys here on YouTube, because even my younger viewers, the ones that are in high school, college, you know, that will watch the channel, which is a smaller demographic. Most people that watch my channel are 20s, 30s. A lot of you guys are in your 40s, 50s, you know, and you're just at a much higher level, right? And even a lot of the younger viewers, the high school or college folks that watch the channel, you guys are at just so much of a higher level than some of these folks on X. I'm like, oh my gosh, and you can just see it. It's crazy, man. Alrighty, guys. So what did I go ahead and bought? Well, I went ahead and bought a brand new stock. Actually, two of these stocks are brand new stocks. One is called Adobe, ADBE. Brand new stock for me in the public account. I bought 222 shares. It was a $78,000 move. So far, we're up $1,700, but keep in mind that it's a brand new position, so it'll shake around here in the short term. And I've been flirting with buying Adobe I'd been throwing that out there on the channel for at least the last few weeks now, right? The last few weeks, I brought up Adobe. I mentioned, like, Adobe's pretty attractively priced here. Like, you know, I don't own it yet, but don't be surprised if I eventually buy it. And sure enough, went ahead and did it. Went ahead and bought Adobe. So when it comes to Adobe here, this is what, if you ever want to know, like, what does a great business look like? Adobe is one of the best examples I can give you in the entire world of what a truly great business model looks like. This next 45 seconds I'm about to take you through, very important. So you can always remember, like, this is what a great business looks like. Recurring revenue streams. That's what Adobe has. People are signed up on monthly, yearly plans, very consistent income coming in all the time for Adobe. That's phenomenal. Additionally, a great business model should be able to grow their earnings per share at a faster clip than they can grow their revenue. And that's exactly what we're expecting for Adobe moving forward, is that them to grow their earnings per share at a much faster clip than their revenue. Additionally, a truly great business should be able to grow their revenue either high single digit or in the double digit range. And that's exactly what we have with Adobe. Additionally, a great business model should have very high gross margins. Adobe has one of the highest gross margins you'll ever see of any company ever. And additionally, a truly great business model should have very, very high net margins. We're talking approaching a 30% number or above. And that's exactly what Adobe. So if you ever want an example of what a great business model is and looks like, look at Adobe. But that's not even the best part. The best part of this whole thing is Adobe trades at a forward P well under 20. Now, for a phenomenal, great, top tier, like, textbook, this is what a great company is, to be able to get that sort of company with these growth rates, with that recurring revenue streams business model that's so consistent, at a forward P under 20, like, it doesn't get better than that, man. And so that's why I look at a stock like Adobe and I'm like, I can't not buy this stock. Like, it's just too dang easy here. And a lot of times in the past, Adobe's forward P would be in the 30s, the 40s, sometimes even the 50s or above. And so that made it hard to kind of look at Adobe and be like, I want to go buy Adobe, right? Over the past few years. Now with a forward P under 20, put me in, coach. It's my time, okay? No, in regards to Adobe, look at the revenue chart for Adobe. here on 1000xstocks.com, right? And this is what's projected to happen with Adobe's revenues. Like, it's just beautiful. I mean, it's just beautiful when you can count on a company year in and year out, quarter in, quarter out, just coming in, putting up great numbers. It's like the holy grail of a business model. You don't have to stress about, it's not like owning a home builder where you're like, oh man, if people stop buying new homes, like I'm screwed. Their revenue's going to tank. The amount of homes they're going to be building tanks. The profitability, we could start losing money on the business model. This is not that with Adobe. Like, the only question is next quarter, does Adobe grow 7%, 8%, 9%, 10%, 11%, 12%? That's the only question. The only other question in regards to Adobe is not like, do they make money? It's just, how much money do they make? We know they pour in ridiculous profits and cash flows, but how much? How much? Like, that's the only question. And that's just so, you can just feel so comfortable holding a company like that, right? Additionally, look at how consistent those gross margins are, right around that 90% number. Insane. Absolutely insane, right? Now, additionally, this company throws off massive profits. What I'm showing you now is a trailing 12-month in regards to earnings per share, and this is what is expected to happen in the earnings per share. It is expected to skyrocket here, and that should be exactly what plays out here, okay? Now, in regards to the company, what's the point of making all these huge profits? Well, the company's going to then be able to do a few different things. One is they can do some massive share buybacks, which right now, Adobe should be buying back as many shares as they possibly can get their hands on. A forward P under 20 right now, with the growth rates Adobe has, buy back, and it's consistent of a business model they have. It's not like this is an ebb and flow business model where all of a sudden their revenue is going to tank 40%. That's not the way this works. And so they should be buying back as many shares as they possibly can. It's not like a home builder where, for a home builder, I'd say, hey, man, stack cash because you're going to go through a bad time. Adobe, there's never bad times. It's just how great are the times. Buy back as many shares as possible right now. Additionally, when you have these massive profits, you can build your cash pile. Now, cash pile is important for two reasons. One is for safety of the business model, right? Safety of the business model, so you can get through tough times if you ever go through it, which Adobe never really goes through tough times, but in case you do, you got a big cash pile there, right? But the other thing that I think gets overlooked right now in regards to cash is keep in mind, if you're a massive company, you can likely get 4% or so on your money still at this point in time, maybe even above 4%. Which means you can make massive amounts of interest. Now, when you are talking about your company that has billions of dollars of cash around, now we're talking 4% can actually add up to a pretty big number, which helps ultimately build even a bigger pie and a bigger pie. So for a company like Adobe, like you could run the numbers on it. If they produce an extra $6 billion and they were just to keep that on the balance sheet and get 4% on that, big money we're talking here, folks, big money. The other thing you can do is you can buy out other companies. Now, Adobe tried an acquisition of Figma back, it was probably 2 or 3 years ago now at this point in time. It was not allowed to go through. The Biden administration, Linda Khan, those folks were not very business friendly when it came to acquisitions. Now, the Trump administration is supposed to be more business friendly when it comes to these acquisitions. We'll see. But the moral of the story is, I don't think it can get less business friendly from an acquisition perspective than kind of the Biden administration was. So if Adobe wants to make some buyouts over the next few years of some other companies, I think they'll have a much easier, at least realistic chance of making those acquisitions possible versus obviously they had no chance of some of these other deals, right? And Adobe, from what I remember in regards to that Figma deal, they ended up having to give $1 billion to Figma just because the deal didn't go through in that situation, right? No, the gentleman that's been leading the company since 2007, I call him Nara, okay, done a phenomenal job. You can look at, since he's taken over this company, look at the revenues, look at the net income, look at the stock price, look at the market, look at whatever you want, every metric, the amount of customers, he's done an amazing job. Amazing job. And he also, remember, changed his business model. This used to not be a recurring revenue business model. This used to be, not a service-based business model. It used to be a product business model. People would buy one product. He completely fundamentally changed the business model, and obviously that's helped the company out immensely. Now it leads us to AI, right? Adobe Firefly, I was looking into, some of the new stuff they have out as far as their photo editing, as far as their video content and whatnot. Oh my gosh, like it looks as high quality or more high quality than anything I've seen in the marketplace when it comes to creating any sort of photos using AI videos using AI, it looks like the creme de la creme. And so at the end of the day, the worst case scenario for Adobe is AI is a net neutral, meaning it doesn't hurt their business model or doesn't help their business model. The best case scenario is AI is going to fundamentally help their business model in a massive way, because people are going to want to sign up for products like Firefly and even a much greater extent. And with the advent of social media, the internet, the world's on the internet nowadays, marketing, photos, videos, more important than it's ever been by a mile, which means a company like Adobe is going to have, much more pricing power, much more leverage as they continue to grow that company over time. So that's phenomenal. So when it comes to Adobe, buying the stock in the 300s or 400s is just an anti-stress ball, in my opinion. Like, it's so anti-stress. Like, there's a lot of companies you could buy in that are very stressful. Their CEOs are all over the place. They're chaotic. They're doing this, doing that, right? A lot of companies that their business models are up and down and all around, and it's just Adobe, especially in this $300 to $400 range where the valuation's at, it's just so anti-stress. It's just such an easy stock for me to buy and hold and buy more shares and buy more shares and just hold. And so that's phenomenal in regards to Adobe. I love this one. And don't be surprised if the shares I just bought in Adobe, don't be surprised if I add to that considerably over the next 3-6 months. Don't be surprised at all. Hey, it's Jeremy. I hope you really enjoyed watching that clip here today. What you're looking at in front of you right there, that's 1000xstocks.com. That's my advanced software that I've been working in the background creating for a long time. This software is so much more advanced than what others are presenting out there in the market. And as somebody that's been in the market 15 years, I want to create something that was simple, that had exactly everything I needed to make my judgments on companies, such as forward P ratios, 2-year out forward P ratios, price to sales ratios, forward price to sales ratios. I wanted the ability to be able to compare different companies versus each other. I wanted to be able to compare a Meta versus a Google versus an Apple and be able to see all those different metrics laid out all next to each other. I wanted a service that I could listen to conference calls right through and even be able to toggle and adjust the speed I wanted to listen to those conference calls. I wanted a service that I could search SEC filings right through. I wanted the ability to do that all in one service, and that is exactly what I've created with 1000xstocks.com. If you want to apply for access to this, go to the description area of this video. You can click that link and go ahead and apply for access to this. If you don't want to do that, you can go to 1000xstocks.com. Enjoy. Alrighty, let's react.
Some of the bigger concerns around tariffs and search. You can see the shares are up only 1% now. We did get some fresh numbers from Waymo, though, now serving more than 250,000 paid rides a week, a 50K hike from February. Deirdre Bosa has more in Tech Check. Deirdre?
So, Kelly, Waymo is not a business that typically gets a ton of attention on earnings calls, but Senator Pichai said something else really revealing this quarter that is catching attention and could even change the competitive calculus with Tesla.
There are future optionality around personal ownership as well. So we are widely exploring, but at the same time, clearly staying focused and making progress, both in terms of safety, the driver experience, and progress on the business model and operationally scaling it up.
Personal ownership has long been a key part of the Tesla Robotaxi bull case for investors. Consumers, eventually, they own the self-driving car, giving Tesla unmatched scale potential and long-term margin upside. That's the bull case scenario. Waymo's version, though, of personal ownership, it comes later, comes after Waymo proves the technology and safety in controlled fleets, which it is already commercializing. But Google has never ruled out licensing its technology, and it's already planning to put the Waymo driver into other lower-cost vehicles. So Pichai's comments, it hints at the idea that individuals could license it too, and that is an exciting idea, Kelly, that could change, again, that proposition, have implications for valuation. There's a lot of other stuff involved too, including, to use LiDARs or not, but something very interesting that came out of the earnings call last night.
There's so much, potential in regards to Waymo on so many different, ways they can go in regards to this and expanding over the next few years. But the moral of the story is in regards to Waymo, it is expanding rapidly. It's not going to stop expanding anytime soon. And if anything, they're going to be scaling up more and more. Like, I think, the 250,000 a week numbers looks huge compared to where they were a year ago or something like that, right? But keep in mind, if we look out a year or two from now, this is going to seem like small stuff. Like in a snap of fingers from now, they'll be doing 250,000 rides a day. And then we'll be talking about 250,000 rides in an hour. And so that's where we're going in regards to this. And so they'll continue to scale out rapidly. They have first mover advantage here. They're the ones that are actually in the marketplace today, that people can go in many big cities and actually go on rides with no driver inside today, right? And so they got first mover advantage. It's massive for them. And, it's going to be a battle, though. There's no doubt. Like, Tesla's going to eventually get in this market, and they're going to be a major competitor, right? Amazon's going to get in this. Everybody's kind of like doesn't even think about Amazon in this market. Amazon's coming. I see their vehicles all the time here in Las Vegas. They're lagging, certainly. Like, it's clear Tesla and Amazon are behind Google. That does not mean they'll lose necessarily long term, but it's very, very clear. Like, one has actual vehicles in the market today driving people around with no driver, and others hope to eventually do that.
Check
right?
D, whether it was CapEx or cloud or search or you name it, YouTube, a lot of questions got answered last night.
They did, but a lot of them actually still persist as well. The AI search to threat, you mentioned a few of them, Carl. There's CapEx, there's lawsuits. That's pretty much already priced into the valuation. But Waymo is not. And this quarter, it got increasing investor attention. This from Sundar Pichai was especially worth paying attention to.
There are future optionality around personal ownership as well. So we are widely exploring.
Okay, so that's going to cover a lot of what I didn't realize those clips were kind of very, very similar. Listen, I explained this on the main channel last night. I'm not sure if you guys got to see my main channel video I put out on financial education last night. If you didn't, watch that this weekend, okay? But you got to understand, Waymo and what Google's doing there is going to definitely be different than the way Tesla's going about it in terms of making money. And this is very important. I explain this to everybody. Google is an advertising business, right? So Google's end all be all is not necessarily making money per ride. I'm sure they're going to make money per ride over time, right? But that's not really the goal for them. The goal is going to be, they are a data company and they're a marketing company, right? The goal over time is, so in the car, they can feed you advertisements. So over time, through the app, they can give you different offers from different restaurants or bars or retail stores or whatever, right? And they have so much more data, they know where you're going. Oh, they know you got to ride over to this place and that place. It's such valuable data. And so Google over time is going to be a heck of a competitor in this market, and not enough people are taking them very, very serious. And you need to take them serious because, one, they got first mover advantage, right? Two, you got to take them serious because their end all be all is not making money per ride. Their end all be all is getting all that data and then being able to market to folks and advertise, right? Like, that's where the real money's at for Google in the end. And all that data, knowing where you're going and all these things, like, that's where the real money's at. So, people got to take Waymo very, very serious in this market. Alrighty, next one up here, Kramer on Robotaxis. And not enough people took Android serious. When Google bought Android, people thought like Apple was going to win. Apple didn't win. Android won. Like, look at the market share of Android versus iOS. It's not even in the same ballpark, essentially. That does not mean Apple was a failure. It's just, they had a different way of going about it. Google said, we don't need to make money from Android necessarily because we're going to make so much money from advertising. So that's the same exact thing now with Robotaxis. It's not going to be about, we're going to make so much money directly from Robotaxis. It's all that data and information and then marketing to folks. That's where the real money's going to be.
Now, I am going to write a piece this weekend for club members about a mea culpa, because at the last minute, I did something that was about as stupid as you can ever do. I read the U.S. government briefs against the monopolist that was Google, and I said, David, I actually feared the government, and I should have been fearing Alphabet's lawyers because they really just real deals.
Yeah, but you don't want to dismiss the potential risk of
No, I did,
litigation.
because I sold the stock. I should have totally dismissed it.
Well, the real fear has continued to be ChatGPT, what that will represent in terms of people using it for queries that ultimately can be monetized in some way, even though ChatGPT has not gone down that road per se, and what that is taking away from Alphabet. That said, in the call, they indicate their AI overview. What do they have? 1.5 billion users or something along those lines.
Now, are they paying to get them? That's the government will tell you that.
Right, but they are monetizing them as well. They
sure
say
are.
at roughly the same,
not even with
at the
ads yet.
same rate.
I cannot believe the lead generation really works. It's the last, it's the end. Like, they use the example, said, okay, what's the best golf ball? All right, so you do that. I don't know. I still using Slazenger from the days of James Bond and Goldfinger. But what's incredible to me is it says it's still the #1 way to get sales, and the tie-in to Gemini is great. Now this guy Philip Schindler, who is much cooler, by the way, than Sean Connery, even in his best days. He is. Do you know Schindler?
I know. I don't know.
Oh God, he does YouTube, and his stuff about he did the NFL deal. YouTube is just it. I mean, there's like, I want to compare YouTube, say, to compare it to like a cable company.
YouTube is a powerhouse. We've talked about that many times.
It's not a powerhouse, it's the powerhouse.
Moffett-Nathanson saying could be worth $500 billion if it traded publicly, which would be a bit above that of Netflix, the ever-surging Netflix, by the way.
It's 16 times earnings. How many times did in the Nathanson be? And all at 16. It was like Crazy Eddie. And it's just, it's positively insane that it's at 16 times
trades
earnings.
at a reduced multiple, in part because of some of the fears that we've discussed.
Yeah.
How about the space between Waymo and the whatever #2 you want to pick?
So before we go further here and get into kind of Tesla versus Waymo and all that stuff, let me be very clear about Google McDougal stock here. Is it a buy? Yes. Easy buy. Easy money. Like easy money. You know, if anybody's got a 3-5 year horizon, easy money. I mean, you know, between what they have going on with obviously the Google search, Gemini I think is going to expand rapidly over this next couple of years. I've been very impressed with Gemini. And so I think there's no doubt in my mind they'll market that right, and they'll get that figured out as far as getting massive amounts of users. And so, you know, don't be surprised if ChatGPT starts having a lot more trouble growing users, I would say probably in the next 3 to 4 months. And their rate of growth starts to slow substantially. And what you're going to see, in my opinion, is Gemini absolutely take off like a rocket ship over this next 12 to 24 months in terms of, you know, amount of folks using Gemini. So, you know, then you got YouTube, you got Android, you got Google Cloud, which is now becoming insanely profitable. Watch my main channel video if you want more data in regards to that. I show you the numbers. Shocking what's going on there. So yeah, Google, easy peasy, lemon squeezy money.
Well, I'm putting my chips on Musk.
You are on Musk.
Yeah, because I don't think Waymo scales the way that people think.
Their trips are up 5x.
Yeah, 250,000 a week.
No, it's
250,000
on real streets.
A week. Go and read what Musk said about what he's going to do everywhere. I mean, these guys are just in the wrong technology.
I don't know, Jim. You know, I like it. It was interesting because Sundar was asked a question about Waymo, and he actually said, that's the first time I can remember even being asked a question about Waymo on the call. Then he went on to sort of indicate some interesting thoughts about the evolution of the business. Take a listen.
We're also building up a network of partners, for example, for maintaining fleets of vehicles and doing all the operations related to that. With the recently announced partnership with Move in Phoenix and Miami, obviously partnerships with OEMs. There are future optionality around personal ownership as well.
So in regards to LiDAR, I think that's an important point because, you know, it's been always talked about like, oh, Tesla doesn't use LiDAR, so it's going to give them cost advantage. LiDAR is very expensive, those sorts of things, right? Do keep in mind in regards to LiDAR, when you depreciate that over the period of how long that car lasts, it's actually a very, very small amount of money. I mean, extraordinarily small amount of money. Like, as in, it's almost meaningless. So when you are first buying it, it seems like, oh, it's a big amount extra. But as you go throughout time, you realize with how many rides it gives, it's like nothing. And additionally, you got to understand, in regards to lawsuits, right? Like, LiDAR is just going to give you much better, like, there's no debate, actually. Like, if you have seen the technology Tesla has versus LiDAR, like, there's no question that LiDAR is better, right? It's going to give you more protection, you know, and at the end of the day, if somebody gets hit by one of these cars or something like that, it's going to be huge lawsuits. Tesla's going to have some crazy insurance on that, or just be doing some crazy payouts because somebody got ran over and somebody's dog got ran over and somebody's kid got hit and all this stuff. It's going to be situations, right? And so LiDAR helps prevent some of that. So, it's not as costly as people
think. Did you hear that?
Yeah.
Future optionality around personal ownership as well. I thought that was interesting.
It is. That's different from the model.
It's different from the model. It's much more akin to what Musk is thinking about with Tesla.
Well, let's remember that Musk just says it's too expensive. He doesn't like the actual technology. I never go against Musk when it comes to technology. This call was an amazing call, okay? It was so painful for someone who had sold it because the government, because, they'll just say, listen, we've got all these relationships, and the government wants to contend the relationships are illegal. And it's like, it's the U.S. government versus the U.S. Google. So they're like, one country has got a great balance sheet. It's really powerful. It's got a leader. It completely works. And then there's another country that's completely dysfunctional that has a Congress and a U.S. I want to bet on the United States of Google.
All right. Well, also 100 basis point beat on the margin, at least in terms of what analysts were looking for. That's a lot.
They haven't even started monetizing the NFL yet. I mean, they're so good.
So you wish you hadn't lost your nerve at 145?
I read that stupid brief about how the one they lost were like, we're a monopolist. I should have just bought on that. I should have said, wow, bet on the monopoly any day of the week. These guys are like, they're like Boardwalk in Park Place, these guys. They're that kind of monopoly.
So Kramer says bet on Tesla, bet on Elon Musk, and we'll see how it all plays out, right? Like, it's going to be a long game here, though. Let's keep in mind, Waymo's in front as of right now, clearly, because they actually have vehicles in the market giving people rides. But with that being said, doesn't mean Tesla can't catch up. Doesn't mean Amazon can't be a big player in this market. It's going to be a long, we're talking this is going to be like a 10, 20-year battle in regards to the Robotaxi market. But here's the one thing I'll caution everybody at. This market's not nearly as grand and big as people think. Everybody thinks like this is like the biggest opportunity ever. It's not. It's not. It's a good market. It's going to be, there's money to be made here. But let's be very clear, this is not the smartphone industry. This is not selling AI chips. This is going to be good money to be made here. The ability to add $100 billion or a few $100 billion to a market cap for the winners is there. But this is not like, people make this out like it's a multi-trillion-dollar opportunity or something like that. It's just not. It's not. And as somebody that's been a Tesla shareholder for 100 years, right? And as somebody that's now a Google shareholder, it's not as big of an opportunity as everybody's making it out to be. And a lot of times that happens when you get a new space and new excitement, and a lot of retail investors that aren't super experienced in the market, they think like it's just like the biggest thing ever. And I'm here to tell you it's not. It's like a good market opportunity. Google's going to have an opportunity to make a lot of money here, but it's not. It's not as cracked up as people make it out to be in regards to that, right? Because keep in mind, a lot of people still prefer to own cars, and that's going to be the way that's going to be for a long, long time to go in the future.